We welcome you all in the 29th annual general meeting of the company. Along with us, we have our non-executive chairman, Mr. Ravi J. Puria, executive vice chairman, Mr. Varun J. Puria, other board members, and our CRO and group company secretary who have joined through VC facility provided by NSDL. To comply with the provisions of the Companies Act, including circulars, our company is conducting this AGM through VC facility provided by NSDL without any physical presence of team members. All members who have joined this AGM are by default placed on mute mode by the host to avoid any disturbance arising from background noise and ensuring smooth and seamless conduct of the AGM. The remote e-voting facility was provided to the members to cast their vote electronically on all the resolutions set out in the notice commenced at 9 a.m. on Sunday, March 31st, 2024 and ended at 5 p.m. on Tuesday, April 2nd, 2024. Company is also providing e-voting facility during the proceedings of AGM to enable members to cast their vote who have not done through remote e-voting. During the proceedings of AGM, members may raise query through the chat box facility provided by NSDL. If any member faces any technical issue, kindly contact helpline numbers of NSDL as provided in the notice of AGM. Now I request our non-executive chairman to kindly chair the proceedings of the meeting.
Good day, ladies and gentlemen. A very warm welcome to everyone present today at the annual general meeting of the company. I hope you and your loved ones are well. I would like to confirm that the board members, including Chairperson of Audit, Risk Management and Ethics Committee, Nomination and Remuneration Committee, and Stakeholders Relationship Committee are present in this meeting. Requisite quorum being present, the meeting is therefore called to order. In 2023, our collective efforts enabled VBL to achieve remarkable milestones despite facing high unseasonal rains in the peak season. The year saw us achieving a healthy year-to-year volume growth of 13.9%, reflecting the strong and consistent demand for our products. Our proactive approach in expanding our product portfolio, particularly with the addition of the energy drink Sting and our endeavors in dairy, hydration, and juice segments have played a role in assisting this growth. Financially, this year was equally successful, with a healthy increase in our top line by 21.8%. Our EBITDA and PAT also saw strong growth of 29.5% and 35.6%, respectively, underscoring our financial strength and operational efficiency. One of the key objectives this year was to build upon the strong demand we experienced in CY 2022. To this end, we embarked on a strategic expansion program, commissioning multiple greenfield and brownfield facilities across India. Along with this, we also expanded our distribution network and chilling infrastructure. These strategic steps have enhanced our operational capabilities and will also enable us to penetrate new markets. As we move into CY 2024, we continue to build on this strong foundation. Central to our expansion strategy is the further development of manufacturing facilities, with the focus on adapting to evolving consumer preference and market trends. At VBL, sustainability is at core of our operations. A highlight of this year's sustainability initiatives is our participation in a groundbreaking project with PepsiCo India. In a significant move towards environmental stewardship, we did a pilot to introduce 100% recycled PET bottles for certain carbonated beverages. As a key partner of PepsiCo, We take immense pride in actively participating in this transformative initiative. Additionally, our community development projects underscore our dedication to social responsibility. This year also marks a significant milestone in our global operations with the acquisition of the beverage company Bevco in South Africa. Bevco is a key soft drink company in South Africa with franchise rights from PepsiCo Inc. under implementation in South Africa, Lesotho, and Eswatini, and distribution rights in Namibia, Botswana, Mozambique, and Madagascar. This move will significantly enhance our footprint in the fast-growing African market. In line with our dividend distribution policy, the board declared an interim dividend of rupees 1.25 per share and further recommended a final dividend of rupees 1.25 per share for approval of shareholders of the company for CY 2023. Additionally, we decided to split the existing equity shares of VBL in June 2023 to broaden our shareholder base and increase the accessibility of our shares to a diverse range of investors. To conclude, I would like to state that we will continue to leverage our strong market position, presence in rapidly growing markets, robust infrastructure, and established distribution network. We remain committed to strengthening our position as a key player in the global beverage industry and are confident in our ability to create sustainable value for our stakeholders. I would like to extend my deepest appreciation to all stakeholders, including shareholders, bankers, creditors, employees, and our board for their unwavering support and invaluable guidance. Thank you for joining us today. Though there is no negative qualification observation in the auditor's report, but to follow good governance, I would suggest Mr. Ravi Batra to read the standalone auditor's report and Mr. Raj Gandhi to take up the agenda items in Siritani.
To the
Ravi.
members of Varun Beverages Limited, a report on the audit of standalone financial statements. Opinion 1. We have audited the accompanying standalone financial statements of Varun Beverages Limited, the company which comprised the balance sheet as at 31st December 23, the statement of profit and loss, including other comprehensive income, the statement of cash flow, and the statement of changes in equity for the year then ended, and notes to the standalone financial statements, including a summary of the significant accounting policies and other explanatory information hereinafter referred to as the standalone financial statements. Point number 2, point number 3, point number 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 taken as read. Report on the other legal and regulatory requirements. Point number 16, as required by section 197(16) of the Act, based on our audit, we report that company has paid remuneration to its directors during the year in accordance with the provisions of and limits laid down under section 197, read with schedule 5 to the Act. 17, 18 read. Point number B of 18, in our opinion, proper books of accounts as required by law have been kept by the company so far as it appear from our examination of those books. C, D, E, F, G taken as read. For JC Balla and Company Chartered Accountants, form registration number 001111N, Akhil Balla Partner, membership number 505002, place Gurgaon, 5 February 24. For OP Bagla and Company Chartered Accountants, firm registration number 0000189, Neeraj Kumar Agarwal Partner, membership number 094155, place Gurgaon, 5th February 24. All the applicable statutory registers, annual report, and other statutory documents were made available for inspection by the members on the website of the company. I request Mr. Gandhi to take up agenda items.
Thank you, Mr. Batra. The notice along with the explanatory statement dated February 5th, 2024, convening the 29th virtual AGM and annual report of the company was sent through email on March 7, 2024, and with your permission, I take it as read. Now I will take all the agenda items for your approval. Item number 1, to receive, consider, and adopt the audited statements, financial statements of the company together with the report of Board of Directors and auditors thereon, and the audited consolidated financial statements of the company together with auditor's report thereon for the financial year ended December 31st, 2023. The proposed resolution is placed before the meeting to be passed as an ordinary resolution. Members who have not yet cast their vote earlier are requested to kindly do the same. Item number 2, to declare final dividend of rupees 1.25 per equity share of face value of rupees 5 each for the financial year ended 31st December 2023. The proposed resolution is placed before the meeting to be passed as an ordinary resolution. Members who have not cast their vote earlier are requested to kindly vote. Being interested, chairman to take up next item, agenda item for approval of members.
To appoint Mr. Raj Gandhi, who retires by rotation and being eligible offers himself for reappointment as a director. The proposed resolution is placed before the meeting to be passed as an ordinary resolution. Members who have not cast their vote earlier are requested to kindly vote. Being interested, Mr. Gandhi to take next agenda item for approval of members.
Thank you, Mr. Chairman. Item number 4, to reappoint Mr. Varun Beverages as a full-time director of the company. The proposed resolution is placed before the meeting to be passed as an ordinary resolution. Members who have not cast their vote earlier are requested to kindly vote. Item number 5, to reappointment Mr. Rajendrajit Singh Baga as a full-time director of the company. The proposed resolution is placed before the meeting to be passed as an ordinary resolution. Members who have not cast their vote earlier are requested to kindly vote. Again, being interested, may I request Mr. Chairman to take next agenda item for approval of members.
To reappoint Mr. Raj Gandhi as a whole-time director of the company. The proposed resolution is placed before the meeting to be passed as a special resolution. Members who have not cast their vote earlier are requested to kindly vote.
Thank you, Mr. Chairman. To appoint Dr. Naresh Tahan as a non-executive, non-independent director of the company. The proposed resolution is placed before the meeting to be passed as a special resolution. Members who have not cast their vote earlier are requested to kindly vote. Now I request our members who have not cast their vote through remote e-voting or e-voting during the proceedings of AGM to kindly vote on the proposed resolutions through e-voting for another 30 minutes after vote of thanks by the chairman. Mr. Chairman, may I now request you to take up certain questions that we have received through email or chat box from the members of the company. Please note that to avoid repetition, identical questions has been grouped and are as under. The first question is, despite the challenging microeconomic conditions causing stagnant or declining performance for many companies, what sets Varun Beverages apart from others in India, enabling it to sustain strong growth?
We are enhancing our go-to-market strategy by adding more chilling equipment, which is a key factor driving our growth and setting us apart from some other companies. Each year, we are adding close to 400 to 500,000 new outlets, which serves as a primary source of our growth. With the electricity no longer a challenge and power now available in villages, we can install more chilling equipments and penetrate deeper into rural markets. Unlike many other companies that reported a downturn in the rural market last year, we have witnessed exceptional performance in rural areas due to our penetration and deeper market reach.
Thank you, Mr. Chairman. The next question is, what are your prospects in the African continent, taking into consideration recent developments in Congo and the acquisition of South Africa?
Our journey in Africa extends back several years, and we have been making significant strides in Morocco, Zambia, and Zimbabwe. Our deep involvement in the African market is a clear indication of VBL's strong commitment and geographical expansion strategy. The strategic acquisition of Bevco aligns perfectly with our goals and presents an excellent opportunity to strengthen our presence in the African market, which is characterized by high demand for soft drinks and favorable demographics. The remarkable achievement strengthens the optimism for the South African market, where despite the current PepsiCo brand nominal market share of 2%, we see vast growth potential. South Africa, with its status as the continent's second largest economy and high per capita beverage consumption, represents a major opportunity for us to expand our presence. In Congo, we are currently in the presence of installing two CSD production lines. It is premature to make definitive statements at this stage. As the market progresses, we will continue to expand our operations accordingly. However, we are aiming for an estimated output of around 30 million cases from these lines.
Thank you, Mr. Chairman. The next question is, could you provide some more information about the opportunity for the snacks business in Morocco, including your vision and the terms of the snacks business partnership with Pepsi in other African countries?
In Morocco, we began our operation in CY 2022 for distributing a full range of snack products, including Lay's, Cheetos, and Doritos. Presently, we are importing the finished goods from Portugal and Egypt to meet demand. However, in response to the increasing demand, we have entered into an exclusive snack appointment agreement to manufacture and package Cheetos. This agreement supplements our existing distribution agreement for PepsiCo's snack portfolio in Morocco. Commercial production from our own manufacturing facility is expected to commence on or about May 1st, 2025. As for exploring opportunities in other African countries within the snacks business, we are open to considering potential prospects that may emerge in the future.
Thank you, Mr. Chairman. The next question is, could you please share the details of the current year's CapEx and outline the CapEx plans for the calendar year 2024?
Our net capex amounted to approximately rupees 21,000 million as of the end of CY 2023, emphasizing our dedication to growth and expansion. Out of this total capex, around 8,500 million was allocated to the establishment of two new greenfield production facilities in Bundi, Rajasthan and Jabalpur, Madhya Pradesh. Approximately rupees 8,000 million was invested in brownfield expansion of 6 of our existing facilities in India, while the remaining funds were utilized for brownfield expansion in international markets, asset write-offs, and managing forex fluctuations collectively. As part of our growth strategy, we have invested approximately rupees 1,500 million in land acquisition, including properties in Buxar, Bihar, and Kangra, Himachal Pradesh, in anticipation of constructing plants in the coming years. For the season to CY 2024, we have already spent 24,000 million in CY 2023, which is part of the closing CWIP and capital advance in the audited balance sheet. Further, we expect to additionally incur approximately 12,000 million towards capex for the season of CY 2024. Out of the 3 planned greenfield plants in CY 2024, one of them at Supa is already operational since January 2024.
Thank you, Mr. Chairman. And now the next question is, could you provide insights into your new categories, specifically regarding juices, Gatorade, dairy beverage products, and how these categories could be the growth drivers as we move forward?
Our new categories, juices, Gatorade, and value-added dairy-based beverage are expected to be one of the significant growth drivers moving forward. These products are vital to our overall growth and are high-value items, significantly contributing to our total value. Currently, only 15% of VBL's retail network receives Tropicana due to capacity constraints. To better align supply and with demand, we plan to establish new facilities that will triple our current capabilities for juice dairy before the CY 2024 peak season. One such facility, Supa in Maharashtra, became operational in January 2024 itself. While the existing portfolio mix is less, these expansions present significant growth opportunities with much higher anticipated volumes.
Thank you, Mr. Chairman. Now, the next question is, could you provide us an update on your progress in improving the go-to-market strategy and your company's current market presence? Do you believe that there is still significant work to be done, or have you most improvements been already implemented?
We are continuously enhancing our go-to-market strategy and expanding our market presence. Currently, we are reaching out of 3.5 million retail outlets in India. In the addition of more chilling equipment has been a key driver for our growth. The availability of electricity in villages is no longer a hurdle, enabling us to place more chilling equipments and penetrate deeper into the rural markets. We remain committed to continually improving our go-to-market approach to maximize our company's market presence and growth potential. While significant improvements have been implemented, we recognize that there is still room for enhancement and refinement in our strategies. We anticipate a yearly expansion of about 10% in the number of outlets, which will result in a proportional increase in our distribution infrastructure, encompassing trucks, distributors, and visi-coolers.
Thank you. And now the next question is, what is the expected increase in peak month capacity for India once the combined capex of calendar year 2023 and calendar year 2024 seasons are implemented and completed?
Once commissioned, the combined capex for 23 and 24 season will increase the peak monthly capacity in India by 45% over the base year of 2022.
And now the next question is, can you provide insight into the growth experience in the international markets?
In CY 2023, our international markets witnessed a robust 18% volume growth rate. These markets have demonstrated outstanding performance, leading us to expand capacities where needed. Consequently, all our international markets are experiencing steady growth, and we expect this favorable trend to continue. Our larger territories, such as Morocco and Zimbabwe, have exhibited accelerated growth rates.
While thanking the members for asking so many, questions to get the insight about our business, there being no other question, may I now request our non-executive chairman to please convey the vote of thanks to the members present.
I request all the members who have not cast their vote through remote e-voting or e-voting during the proceeding of AGM to kindly vote on the proposed resolution through e-voting for next 30 minutes. I hereby authorize Mr. Ravi Batra to sign and file the voting results with the stock exchanges. I declare the meeting as officially concluded and would like to extend our special thanks to the board members, management, and the members present for attending this AGM. Stay safe, stay healthy. Thank you very much.